Welcome to the channel Get Rich. Today the company we are going to look into is Jubilant Foodworks Limited. So as you might know, they are the largest franchisee of Domino's Pizza. So let's first have a look at the business segments of Jubilant Foodworks and then their financials and finally the valuation of Jubilant Foodworks. So let's get started. Financial highlights. So in financial 2021 highlights, if you look at that, so they have 146 new stores opened across all of their brands, and 98.4% is average online ordering contribution to their sales delivery for Domino's Pizza, and their EBITDA margin is around 23.5%. So if you look at the what are the different brands Jubilant Foodworks Limited has, so if you look into that, so they have franchisee of Domino's Pizza, Dunkin' Donuts, and they have their own brands like Hong's Kitchen and then Egg Dome, and then now recently they are also introducing a Popeyes franchise, and then Chef Boss is a ready to ready to eat kind of additional FMCG business they are entering in. So these are the different brands Jubilant Foodworks Limited has. And if you look at some of their key highlights, so they have 12 supply chain distribution centers, 135 plus network of certified food business partners, and they have around 1396 restaurants across all brands. This is as of March 2021 or March 2022, I would believe. Still it's increasing, and then if you look at the presence in cities in India, so if you look at that, so it's 293 cities presence in cities in India. So these data are as of March 2021. So if you look into their as of January 2022, they almost reached 1500 restaurants of Domino's Pizza. So then if you look at their other key highlights of the recent quarter, so they have revenue from operations was about 1193 crores, higher by 12.9%. So their momentum is increasing because more and more restaurants are opening up, and then the COVID restrictions are going away. People are coming back to eating in restaurants, dining in, and so on. So that's good for them. And also their EBITDA margin is 26%, their profit margin is 11.5%. That's industry leading margin. And then if you look at their new store opening, so they opened 75 new Domino's Pizza stores, a record number in the last quarter. And then they also opened two new stores of emerging business units, one for Dunkin's and then one for Hong's Kitchen. And they also have highest ever Domino's app downloads in this quarter, 8.2 million, and then their online contribution to delivery sales is about 79.6%. So they also increased their shareholding in DP Eurasia to 40%. So DP Eurasia, they also have largest franchise for like regions in Georgia, Russia, and so on. We'll look into that in detail in some time. And then they also acquired 30.75% equity stake in Hashtag Loyalty Private Limited, which is an online food ordering platform Thrive. So then if you look into their key operational highlights, so they opened 134 Domino's Pizza restaurants with 50 restaurants opening each in quarter 3 and quarter 4 financial 2021. So these are the highest addition in the quarter. They also forayed into a FMCG category with Chef Boss range of ready to cook sauces, gravies, and pastas, and also our pace. And if you look at the other restaurant, they also opened Egg Dome, so which is they entered the most loud space of biryanis we have. So they entered into biryani space with their brand Egg Dome. And then they also announced acquisition of 32% equity stake in DP Eurasia. But then that's concerning with the current situation of Russia, Ukraine situation. So in Russia there are a lot of uncertainties, so they also have shares in those region, which is DP Eurasia. They are operating in Georgia, Turkey, Russia, and then Azerbaijan. So in Russia, it's almost uncertain. The US restaurants are pulling back, so it's facing a huge problem, DP Eurasia. So that's also not a good one to speak about at this point of time. And then they also announced a multi-country master franchise agreement with Popeyes. So this is also one of the largest chicken quick service restaurants in over 25 countries around the world. So they are increasing their they are diversifying their businesses from Domino's to Dunkin' and then to Popeyes and so on. They are also increasing their diversification of their restaurants. And then if you look into their recent announcement, they also invested like 92 crores in Barbecue Nation for equity stake of 10%. So currently it's valued around 4,500. So their stake there will be valued at around 450 crores, I would say. And then if you look into their key highlights. So they have a market cap of around 36,000 crores, their stock PE of about 85 or 86, and then their return on capital employed is 16%, and then their return on equity is 18%, and then their return on assets is 6%, and then if you look at their return on equity, it's also 18%. Their debt to equity is 1, so it's high. I always go for companies who has like less average, less than 0.5. So this one is a capital intensive business, so they have a debt to equity ratio is 1. So yeah, that's not so high, like 1.52 it's so high, but debt to equity of 1 is high, but still okay, I would say. And then if you look at the price to sales is 8.62, and then the price to book value is 21.4, and their current ratio is also 0.71, not that much. Yeah, at least want to see companies having current ratio more than 1, but they are also having 0.7, not that ideal. PEG ratio 4.56, so that's also not ideal, I would say. So their valuation parameters are pretty stretched. If you look at the PE is almost 86, and if you look at the other parameters, their valuation are a bit on the higher side, but also that depends on how much growth they have in their future. So then if you look at their price chart, so they've even reached 4,500 rupees at some point. So currently it corrected to around 1,800 levels. So Jubilant Foodworks Limited is the largest player in the Indian QSR market. So they nearly have 2x higher in terms of the number of stores, which is the next largest player. So it also dominates the QSR pizza market with over 70% market share. So they're market leader in the segment they are operating in. And then if you look at their P chart, so they even reached 200 P at some point, and then currently they are around 86 P. Their average P is somewhere around 76, so median P, I would say. So then if you look at their business segment, what are the different key business segment they have? So they have Domino's Pizza franchise, and then Dunkin' Donuts. They recently introduced Honk's Kitchen, and then Egg Dome, and then Popeyes also they are going into, and then they have Chef Boss. So Domino's Pizza, is a big pizza business, so that's their main key revenue driver. It's a mature business, Domino's Pizza, and then they introduced Dunkin' Donuts, which is around 25 stores. I would say Domino's Pizza they have around 1,500 and so on. And then the Honk's Kitchen also they recently, it's their own brand. It's a Chinese brand they are going into. And then the Chef's Boss is FMCG player, ready to cook gravies, paste, and so on. And then Egg Dum is like kebab, biryanis, these kind of businesses, Egg Dum. So these are the small businesses, are the emerging businesses. Their key one is Domino's Pizza business. So they also launches Popeyes. They are also entering into. That's good to see. And then if you look at their city town coverage, how much cities or towns they are covered. So if you look at the quarter over quarter, it's increasing. In quarter 3 financial 2021, it's about 285. So currently it's around 322. In quarter 3 financial 2022, they cover almost about, they have restaurants in 322 city and towns in India. And then if you look at their portfolio of different brands, so this is as of March 2021. So the Domino's Pizza, they have around 293 presence in number of cities, and then Dunkin' Donuts 8, Honk's Kitchen 2, Egg Dum 1, and then they have a presence in Sri Lanka of 18, and then they also have one restaurant in Bangladesh. And if you look at their Domino's Pizza, which is the biggest business, and if we see their presence, where are they present? So they are mainly present in India. This is the biggest business, and then they also have presence in Sri Lanka, Bangladesh, and then they also have presence in Georgia, Turkey, Azerbaijan, Russia. So I would say so that's based on their subsidiaries, or they acquired Netherlands-based Fitz Food Systems through their wholly owned subsidiary. So they hold 32.81% equity shares in DP Eurasia, which in turn is the largest master franchise of Domino's Pizza brand in these particular countries. But then currently having a business in Russia is not ideal. But then they are having it, so they have to face the business in there, because the business is not stable there, looking into the current situation. But then they have to face it, so that's also one of the negative I am seeing it in this business. And also if you look into their Domino's Pizza India network, so restaurants at the end of the period, if you look into the restaurants at the end of the period, quarter 3 financial 2021, they have around 1,314, and then quarter 3 financial 2022, they have around 1,495. So they almost have about 1,500 restaurants of Domino's Pizza in India. And if you look into their new openings, they opened like 75 new stores in India in quarter 3 financial 2022. This is the record number in single quarter. And if you look at the next one, which is Dunkin's Donuts, so Dunkin's network, if you look into the restaurant at the end of the period for quarter 3 financial 2021, they have about 27. So quarter 3 financial 2022, they have about 29 restaurants for Dunkin' Donuts franchise. And then the next one is Hong's Kitchen. So they have in quarter 3 financial 2021, they have about 10 restaurants, and then quarter 3 financial 2022, they increased to about 22 restaurants of Hong's Kitchen. And then if you look at their international highlights, so they have Domino's in Sri Lanka, so they have about 32 stores in Sri Lanka. So they, if you look at that, they opened one new store. And then also their average contribution to delivery sales, their online contribution is about 63% of 64%. And then they have in Bangladesh, they have about 8 stores, so there also it's about average online contribution to delivery sales percentage is about 63-64%. Also, the situation is not ideal in Sri Lanka because it's also facing a lot of problems. The economy is shaking down, so that's also not ideal in Sri Lanka. So that's also something to consider. But then these are very small businesses. Their main business, key business, is in India. And if you look into their online ordering percentage, so their average online contribution to delivery sales is about 97 to 98%. And then their mobile ordering sales contribution is also about 97 to 98%. And then their download of mobile ordering app is about increasing from 51.2 million in quarter 3 financial 2021 to almost 79.5 million in quarter 3 financial 2022. And then if you look at their sales recovery, so due to COVID, a lot of restaurants business faces a lot of issues. So currently the sales is recovering. So they are seeing a recovery across board: delivery, takeaway, dine-in plus takeaway, and so on. So that's good to see their sales is recovering. And then if you look into their innovation, are they doing any innovation, how it is going? So if you look at their innovation, so they introduced the Unthinkable Pizza, India's first plant protein based product, which is 100% vegetarian, so infused with the sensory properties of chicken. So they also market it as vegetable based chicken. So they are also introducing a lot of new innovation products in there. So they also carried out first big innovation with the launch of a first of a kind pasta pizza range. So they have a pizza with a topping of pasta, and they also launched new ranges of like pastas. Also they also launched like different flavors of garlic breads and so on. So that's good to see. And also if you look at their Hong's Kitchen, so they also introduced like extension of momos, launch of soups, and new products in there. So that's also good. And then if you look at their Dunkin' Donuts, they also introduced beverages for like delivery named as Dunkin' Cold Coffee at Home. They were available in 3 different flavors, and they also launched like make your own donut, so you can pick toppings and other breads and so on. So that's also a good thing. So they are having like a lot of innovations in this business side. And then if you look into their investment, they also have 10% stake in Public Nation. It's not an innovation, but I just put it in there. And then if you look at their financials, so if you look at the financials, so in financial 2021, so their business revenues is increasing. They have about I think 3,260 crores of revenues, and then their EBITDA is around 766 crores in financial 2021. So it's all increasing. And then if you look at the net profit, it's also increasing. Then it reduced in financial 2021. EPS is also follows the same. And then if you look at the net worth, it's increasing. It's on the increasing trend. Their reserves and surplus is also increasing, and their dividend per share it's also increasing, even though it's stabilized in 2019, 20, and 2021. Their number of employees is also increasing. And if you look at their income statement in quarter over quarter, in March 2019 they have sales of 873 crores. December 2021 they have about 1200 crores. And if you look at the net profit, it's 79 crores in March 2019 and 134 crores in December 2021. So their profits and their sales are increasing over quarters. And if you look into their year over year income statement, so if you look at the March 2010, they have sales of 424 crores. Currently in March 2022, they have about 4,258 crores sales. And if you look at their net profit, it's 33 crores in March 2010, and currently they have 430 crores net profit. So their operating margin is currently sitting around 26%. It's a record level. I would say if they can maintain these kind of margins, that's pretty good. And then if you look at the sales growth, it's about 17% for the past 10 years. Profit growth is around 12%. And then their return on equity is also around 20 to 20%. So that's also good to see. And then if you look at the balance sheet, so their balance sheet is increasing from 200 crores to about 4,150 crores. But then they also have their borrowings increasing recently from March 2020. That's not ideal, but then they have a debt to equity of 1 now, because since they are debt free for so long, and then they recently had a lot of debt. So that's their balance sheet. And also then if you look at their cash flow statement, so they are not cash flow positive yet, because they are doing a lot of investments. If you look into their cash flow from investment activity, so they are keep on investing in their business. And then if you look at the operation cash from operating activity, this is increasing. That's very good. So it increased from about 200 crores in 2016-17 to almost 750 crores in 2021. That's good to see. But then they are also investing heavily, and they are also paying back debts, but still they have significant debts on their books. So they do not have yet free cash flow in the cash flow statement. And then if you look at the analyst estimates, what analysts are projecting in 2023 and 2024. So if you look at the one of the analysts, they are projecting to about 5,158 crores for 2023, and then 5,800 crores for 2024. And another analyst is projecting 5,300 crores for 2023 and 6,230 crores for 2024, with the bottom line of about about 550 crores for 2023 and 660 crores for 2024. Another analysis is estimating 580 crores for 2023 and 730 crores for 2024. If you look at the shareholding pattern, so promoter holding is steady. And then if you look at the DII or mutual fund holding, so it's decreased, but then recently slightly increased. And if you look at the FIIs, they are increased and then recently decreased. Usually FII and DII will act always differently. So then if you look at their what mutual funds are doing in the recent months, so they are buying in December, buying in January, buying in February, buying in March. So the share price dropped so much in the recent month, 40 to 50%. So then some of the mutual funds are buying the dip. And if you look at which are the mutual funds they are holding this particular company, so look at the Kotak FlexiCap Fund, UTI FlexiCap, DSP Midcap, UTI Mirae Asset Large Cap Fund. And then if you look at the DSP Tax Saver, Motilal Oswal, UTI Sundaram, Kotak, IDFC. So a lot of funds are recently buying this dip. So after the dip, some of the mutual funds are feeling it good deal, but still the valuations are at 86p. Let's talk about in the valuation section. And then if you look at the valuation section, so they even had a P of 150 or something, and then currently they are sitting around 86. So the average P for this company is sitting around 74, 75. That's the average P for this company. So if you look at the valuation, so first let's go over the revenue projection. So in 2022 they are expected to do about 4,258 crores. 2023 I'm projecting it to be 5,200 crores, and 2024 5,800 crores, with the price growth of, or the revenue growth of 22% for 2023 and 12% for 2024. And then the net income projections is 550 crores for 2023 and 650 crores for 2024, with the growth of 28% for 2023 and 18% for 2024. So if you look at the price target with the current valuation, which is P of 86, so then the 1 year price target would be 3,583 rupees, and the 2 year price target would be 4,235 rupees, with the price cumulative growth of 29% for 1 year and 52% for 2 year. But then we have to consider a lot of risk in this company. So what are the key risks in this particular company? So there are many risks, I would say. So you might have seen in the news their CEO recently resigned, and then a lot of senior management people are also resigning or going out of the company. So that means so their new management should come, and then they have to do good well. They have to execute their growth strategies well, because the previous CEO, he was doing a phenomenal job. So he turned around the company. He was doing a pretty good job in the management and execution. So he left now, so that's one uncertainty we have to face. And then they are also doing a lot of capital allocation. So they invested in DP Eurasia, they invested in Barbecue Nation, and then they are also doing a lot of these kind of investments. So these they has to pay well. For example, in DP Eurasia, it's in Russia. The current situation in Russia, it's not going that well, so we don't know what is going to happen in that particular business. So that's also one of the concerns I have. And also, if you look at the valuation, so it's valued at 86p, and if you look at the growth, so I would say the average growth, it will be around 15%, 12 in the lower end, 15 in the medium, and 20 in the higher end. So somewhere between 12 to 20%. That's what I would expect the top line growth of this particular company. So for a company which is growing around 15%, 86p is, for me, it's pretty on the higher side. So that's also something to consider. So considering all of this, I would say I would take a P of 60 to 65 to be safer side. So if we take a P of 65, which is also still on the higher side, because still it's in the restaurant business, FMCG business, so that's it's always valued at the higher P's. So if we value the company at the P of 65, then the 1 year price target would be 2,780 rupees, and then 2 year price target would be 3,201 rupees, with the price cumulative growth of -3% and 15%. So then if you ask me if I am investing in this particular stock, so you know what I'm going to say. So I'm not going to invest in this company at this point of time, because there are a lot of uncertainties, and then yeah, the valuation are not that cheap yet, even after the correction of 40 to 50%. So I would say I personally would avoid this stock. I would not buy this stock, but it depends on person to person. You can have different thoughts or opinions, but that's completely fine. But my personal opinion is I will not invest in this particular stock. So that's my personal opinion. This is not a financial advice. So the company is good. They are going pretty good. The QSR companies is going to do very well. Still, India has a huge market for the QSR companies. So everything is good. It has a market potential. It's, as of now, it's executing well. They are one of the biggest, and then very good growth ahead, and also they have a very good margins, and they are more profitable than any other restaurant chains. So that's all good things, but still the valuation is concerning, and they also have some of the short term pains ahead for this company. That's also something to consider before investing in this stock. So that's all for today, and thank you for watching. And if you like this video, please like, share and comment. And if you would like a free email newsletter from this channel, please subscribe in the link below. Thank you for watching, and have a nice day. Bye bye.